If you're convinced that Forex trading is your golden ticket out of poverty, it's time for a serious reality check. The internet is full of stories about overnight millionaires, but the truth is far less glamorous. Many people jump into Forex with dreams of instant wealth only to find themselves facing harsh lessons and empty accounts. The idea that you can turn a tiny sum into a fortune overnight is a fantasy that leads countless beginners down a dangerous path. Let's get honest. Forex is a business, not a miracle cure, and it's definitely not a rescue plan for those struggling to make ends meet. Like any real business, it demands knowledge, discipline, and most importantly, capital. If you treat it like a lottery, you're setting yourself up for disappointment. The market doesn't care about your dreams or your hustle. It only rewards those who play by its rules. Here's the cold, hard truth. Forex trading rewards capital, not just effort or ambition. You can study charts all night, watch every tutorial, and hustle harder than anyone else. But if you don't have enough money to trade with, your potential profits are limited from the start. The market is designed to scale with your investment, not your sweat. Let's break it down with a simple example. Imagine you own a small store in your neighborhood. You're hardworking, you show up every day, and you do everything right. But if you only have N10,000 worth of goods on your shelves, even if you sell every single item and make a generous 50% profit, you're walking away with just N5000. No matter how hard you work, your earnings are capped by your starting capital. Now imagine you're able to stock N10,000 worth of products. Suddenly that same 50% profit means you're making N500,000. The difference isn't in your effort, it's in your capital. The more you can invest, the more you can potentially earn. This is the same principle that applies to Forex trading. Capital is what scales your potential. Hustle, determination, and long hours are important, but they can't multiply what isn't there. In Forex, your account size is the engine that drives your results. So, why do so many small traders find themselves stuck, unable to break through to real profits? The answer is simple: desperation. When you're trading with money you can't afford to lose, every decision becomes a high-stakes gamble. Desperation leads to risky behavior, like overtrading, chasing losses, and using dangerously high leverage in hopes of a quick win. These are the traps that wipe out accounts faster than any market move. Think about it, a $200 account with 1,000 leverage isn't really trading, it's gambling with the odds stacked against you. The temptation to risk it all for a big payout is strong, but the reality is, one wrong move can erase your entire balance in seconds. All it takes is a single bad trade and your account is gone. No second chances, no safety net. This is the harsh environment that most small traders face every day. Then there's the emotional pressure. Trading with your last $100 isn't just stressful, it's paralyzing. Every tick in the market feels like a personal attack, and fear clouds your judgment. When your survival depends on every trade, fear and anxiety take over. It becomes almost impossible to make rational, well-thought-out decisions. Instead, you're driven by emotion, not strategy, and if you have no backup funds, one loss can knock you out of the game for good. There's no room for error, and that's a recipe for disaster. The bottom line is this: Forex favors those who can risk capital they can afford to lose, without betting the rent or grocery money. It's about calculated risk, not reckless hope. Here's a real-world example. A trader in Lagos started with $50,000 and using a solid strategy, made $11,000 in just 6 months. He wasn't desperate, he wasn't gambling. He was trading with discipline and enough capital to weather the ups and downs. Meanwhile, his friend tried the exact same strategy with just $500. After months of effort, he made only $110, got frustrated, and eventually quit. The difference wasn't in their skill or dedication, it was in their starting capital. Same skill, same market, but completely different outcomes, all because of capital. If you want to succeed in Forex, understand that it's not about finding a shortcut out of poverty. It's about building a foundation, managing risk, and growing your capital over time. Follow for part 3.